I don't believe in the Dow rule of 20%. I believe that a lot of times we have had 20, 22% and then, bounced back for the next rally. But we are seeing tremendous growth stories also coming in India now. Something in the CDMO space, CMO space. We are seeing something in hospitals.
How Cipla has seen a bit of a jump. Piramal Pharma is doing very well in trade.
Looking at the numbers posted by Dr. Reddy's laboratories, the pharma major's revenue has gone up.
So our first principle is buy value only when there is overall value in the market. Because otherwise what may seem value may actually be a value trap. Do not buy the leaders of the last run when they are falling. That is the biggest problem. I have seen clients' portfolios.
Like, give me an example. Hey guys, I'm happy to be a part of Zerodha's media network. Together, Zerodha and I plan to bring to you simple yet effective and impactful news and views from the best minds in the financial world. Hey guys, welcome to the Money Mindset. I'm Sonia, and as always, we're here to talk to people who have been through many bull and bear markets. Today, my guest is Anirudh Garg of INVASSEST PMS. Now, INVASSEST PMS has been one of the best performing PMSs. If you map the last 5-year trajectory, it's given you over a 30% return. And Anirudh is here with me. Anirudh, thank you for joining us.
Thank you, Sonia. Thank you for having me. It's a pleasure indeed.
And it is, it's such a crucial time in the market because we are in a bear market now. How are you feeling about it? Because you've had a very good track record so far, but this is a slightly uncomfortable situation given that not too many people have seen many bear markets.
Yeah, Sonia, when it comes to us, I think we were one of the only fund managers in India or the only PMS in India who took a call of going 100% into cash. We were criticized a lot back. I remember it was 16th of December or something when the small cap index hit its high, and we were not like we moved 20, 30, 40, we moved 100. And
in December?
Yes, 16th of December. And I explained it to my investors in a way that if I, as a fund manager, I'm not feeling comfortable. Why? Because first of all, the valuations were very high. We all knew that. Everybody knew that the valuations were high, right? And secondly, I would say the comfort was not there. The growth was not coming. We were waiting each quarter and quarter. But since when the stocks are giving you return, you tend to overlook the obvious. But at the very end, I realized that the way the IPOs are coming, the way SME IPO market is behaving, the way my investors were behaving, I had a few investors back in June of 2022 when I got them in. I was like, please invest into the market. And they had not explored the market till then. And when I talked to them in December, they were like, we have a portfolio of 10 crore rupees in the market now. And I was like, who is managing your portfolio? We did well for you. Why aren't you giving us that money? So they're like, we are doing it ourselves. And like, what have you bought? They've bought penny stocks like SCPC and stuff. And I was like, what is happening? These are signs of exuberance and we need to take a breather sometimes. I think, that risk reward ratio was not there that time. Aane ke liye 10, jaane ke liye 40. And then now I believe I have a different opinion on a bear market right now. I believe it's a bull market correction. I don't believe in the Dow rule of 20%. I believe that a lot of times we have had 20, 22% and then, bounced back for the next rally. If you look at the Indian markets history, be it 2016 or 2011 or, maybe, both of these. So, I believe it's a bull market correction. The rally from here would be very, very selective. It would not be as widespread or as inclusive as it was in this current run. That is generally is, and I believe that currently the valuations have come down. Our portfolio that we wanted to buy, we are getting at 40% cheaper, 35-40% cheaper.
So if you had to just, let's just unpack all of this slowly. You were one of the few people who moved completely to cash in the month of December, right?
Yeah.
And since then, since September, the market has corrected 15%. So what are you doing right now? Are you deploying money? If yes, where are you deploying?
So first of all, I believe that when we say that markets have corrected 15%, Sonia, you have to recognize that fact that none of the investors that we know have deployed their wealth in index funds. Yeah, the stocks have come down 30-40%. The risk was not 15%. The risk was 40%. And now, so where are we deploying is basically, we are deploying in value and growth. Yeah. So my model is, first of all, when there is too much fair in the market, when the valuations are all right, we would go for value. Because in value, we would take those amazing blue chip companies which start, to trade below their intrinsic value discounting. Everybody has a factor discounting for the next 2-3 years. and I believe we are getting wonderful companies. For example, in ABB. This is not a recommendation to buy and sell, guys, and any stocks that me and Sonia are talking about, this is just casual conversation, not a recommendation. Please consult your financial advisors before taking any decisions. But the ABB is trading at 9,000. You're getting it for 4,500. The results are wonderful. Yeah. So you have to look for these blue chip companies in a bull market correction, just provided that the next couple of years shouldn't be bad for them. Then the correction doesn't stop.
So any more examples of companies which have corrected quite a bit, but earnings have been very good? So, valuation wise looking attractive?
I think a lot of them, maybe ABB is one. Okay, I like Trent. Trent is down 40%. I originally belong to Ludhiana, it's a tier 2 city in Punjab. And if you look at Ludhiana only, Trent has opened 4 or 5 stores. And when you go to the stores, they're all full. Yeah. So as the Indian middle class is progressing, yeah, the level of income is going up. So first thing is fast moving fashion. Fast moving fashion for everybody is a very, very good thing. So I like something like a Zomato. Yeah. Though the results have not been that great, but we all know, we are addicted to it. Yeah, somewhere we can hold it in our long-term portfolios whenever we are getting cheaper.
But companies like Trent are also seeing a lot of competition now, whether it's coming in from Shein or whether it's other players.
I absolutely agree to that fact, but I have seen that these companies which are leaders in what they're doing. So Trent is a leader in what it is doing. So whatever change will come, Trent will be able to adapt to it better than the rest, So whenever you're getting such companies 30-40%, Trent, we are getting 40% cheaper.
Correct.
Yeah, so it's a good buy. It doesn't perform for 1 year, maybe the valuations have to be, but then you can hold it in your long-term portfolio whenever so this is a strategy that, we have followed in the past with American companies, especially the ones with Amazon and all these companies. So whenever you're getting blue chips at a discount, you can hold them. And then relatively, as the valuation goes up, now if it's come from 9,000 to 4,500, it goes to 7,000, 7,500, maybe we can take an exit and shift to the growth stories. But we are seeing tremendous growth stories also coming in India now.
Okay.
Yeah? Something in the CDMO space, CMO space, we are seeing something in hospitals. A lot of EMS is doing quite well. So a lot of growth is also being witnessed in India.
So you said you're from Ludhiana. Very interesting to know what is happening in tier 2 and tier 3 cities. Is there really a consumption slowdown? Because a lot of people are talking about that, how the lower end of, the sort of, what do you call it, low middle class or middle class, middle income, lower middle income population is seeing a consumption slowdown because of high inflation. But what are you noticing in Ludhiana or other parts of the country?
See, if we talk, I totally don't agree to it. If we talk about the lowest strata, I don't know, maybe, but the general strata, okay, not like
middle income.
Yeah, middle income strata. The Mumbai, Chandigarh, which caters to Ludhiana and around areas, the Mumbai-Chandigarh flight is one of the costliest sectors, is one of the costliest sectors in India. A Mumbai-Chandigarh flight is at least 2x to 3x of what a Mumbai-Dubai flight is. Same time, same distance, but that is the difference. So people are paying, you will see Zomato people, Blinkit people everywhere now. People are paying, level of incomes are going up, asset prices have gone up significantly, Sonia. So everybody owns properties these days. So property all over India has gone up. I would believe that property in Mumbai has not gone up that much as much it has gone in tier 2 cities. Yeah. So I believe where my office, original head office is in Ludhiana, the property prices are up 3x in the last 3-4 years. So I would say the wealth of people has increased, and that gives them the confidence, to increase their spending as well. Okay. So I totally do not agree to the fact that, of course, maybe it may be for staples, because things are changing there. Now I do not go to the Karyana shop and order. I order through Zepto, and I'll order what Zepto will show me. Yeah. So things are changing on that front. But I believe that there is no consumption slowdown.
Okay, that's interesting. So let's get back to how to identify stocks, right? So you said that, okay, this is a good time to be deploying some money and to looking at large caps that are down 30-40%, but still have the growth story intact. Where else? Where else do you see the growth story intact now? So we spoke about Trent, we spoke about ABB, what else?
So you will see, look at the CDMO sector. Yeah. The CDMO sector is a fabulous sector to invest in. Now Trump is back. Now we all know what bad things people perceive he is doing. I'm a fan of Trump, but I believe that the US Biosecure Act is a game changer. Yeah. So they have directly listed Chinese companies' names and said that you will not procure from these companies. Yeah. So now, if we have to compete with China or maybe Vietnam and all these Southeast Asian countries when opportunities of disruption are going throughout the world, what sectors can compete? Some sectors are just building, you know, they are on the ground level, they are moving up. But we have a pharmaceutical sector which has been there for the last 30 years. It's been trained by FDA, it's been trained by the Indian authorities, so they know compliance as well. Yeah, if you look at Laurus Labs, just go and read the Laurus Lab ka commentary. They are clearly saying that our other businesses are increasing at 5-7%, but our CDMO division is doing wonders. Yeah, in the they are expecting, I don't know, to double it in the next 2-3 years. And the targets that everybody is giving till 2030 is, I think, hard to believe. So I like the CDMO space. कुछ तो growth आना ही है उधर, है ना? So,
but apart from Laurus Labs, बहुत सारे दूसरी
a lot of
companies भी हैं,
Newland,
हाँ,
Laurel,
Newland
a lot of them, you know, Windlass, a lot of them. The CDMO space is going to do very, very well in the next few years, I believe so. We hold position in the CDMO space. We may cut them anytime, but yes, I believe that this sector is nice. Somewhere, I think the valuation comfort is not there, but the financial market infrastructure space also looks good to me.
Okay, so financial market infrastructure, you're talking about like these
exchanges, depositories, good
CDSL.
yes.
But
yeah.
CDSL has also fallen so much.
That is an opportunity, you know. I believe it is an opportunity. You know, see what is
Every second day somebody asks me, CDSL itna gira hai, kya karu?
You know, that is what generally people like to buy the leaders when they fall. But the point is that the expense, I would say the valuations here are not that good. The valuation comfort is a little bit less, but of course the growth story is intact. Sonia, somewhere I believe that back in 2006, whenever the last run of the market used to come now, all these JM financials and all these used to run and then they used to collapse. You know why? Why? They were cyclical sectors. But now I believe that the Indian retail has shifted from that FD mindset to equity, and they have accepted equity as an asset.
Correct.
I think whatever the SEBI did right in the last couple of decades to mutual funds sahi hai and all, now it is playing out. Now the retail feels that, okay, I am comfortable in this asset class and this is not satta. You know, everybody used to believe, we used to convince people here, it is not satta, please, it is a proper asset. So people are like, nahi, you guys, people never used to believe us. Now they do. Now you can sell a PMS over a con call. Yeah.
But don't you think conviction has fallen a bit after this bear market started?
Oh, every time a bull market or a bull market correction or a bear market comes, the conviction goes down, but we have to see the relative change. कि मतलब कितना नीचे गया. Now it is not like, if you will see, people are not कि हाँ अब हमें stock market में invest ही नहीं करना है. We'll come in the next bull run. People are, you know, our clients are topping up. They are, you know, they are afraid. It's okay to be afraid. They're not seeing bull market corrections or bear markets, but when you explain it to them, they are staying. So I believe that the retail is not that fragile now. Yeah. And the asset class is totally changing. So somewhere we are having a re-rating of this asset class. And all the good, good players, the leaders in different sectors, be it an exchange, be it maybe a depository, CDSL we were talking about. BSE never used to work only. Yeah. You know, we have all seen it. Na? BSE, kahan NSE shuru hui, kahan pahunch gayi, and BSE never used to work.
Correct.
Now, I believe...
the BSE stock now.
Yes. See now, what has happened? I talk about relative change. So what has happened with BSE is that NSE, you were trading options on 5 days. Okay. Huge volume, the biggest volume in the world we have in Indian exchanges. Okay. And BSE was not able to enter only. Then comes SEBI, who says that out of 5 days NSE, we are giving you 1. And BSE, we are also giving you 1. Now, all this volume that is there, now automatically comes to BSE. So, sometimes you get a blessing in disguise. Yeah. 5 days stopped. I was not able to do 1 day only. Now, I have at least 1 day with full volume. And then, you know, once you start moving in that league, so maybe, who knows, tomorrow it becomes as good as an NSE.
But BSE has seen a huge run-up. It's been a multi-bagger. Do you think the growth story is still to play out, or has it reached its mature phase?
I think it has played out a bit.
Okay.
But it should be an above-average performer from here. Yeah. So it has played out a bit, but I still believe there is some steam left, because there is lot. Like only in terms of BSE we look, it is expensive. You are absolutely right. But if we look at the whole scenario on how things would be in the next few years in India in terms of financialization of assets, I think the story has just started. Yeah, okay. Lot of scope.
So we've spoken about CDMO companies, financialization of assets. We've spoken about large consumption companies like Trent, etc. Where else? Where else do you see potential in the market? Because in the last, if you look at the last bull run, right, the leaders of the last bull run came out of nowhere. Whether it was railway, it was defense, it was PSU companies. I want to understand, when the next bull market begins, who could the leaders be?
So now 50% of my portfolio in the last run were these companies. And
Railway
I spotted,
and defense.
yes, railways, defense, infrastructure, power, because I focus on relative change. My relative change means an advantage which a sector or a company has today, which it did not have earlier. I'm trying to answer one small question. Ab tak hua, aage kya? Yeah. So going into an election year, the government is not going for populist measures, but is so confident it's going for capitalist, capital expenditure, and that too highest in the last 2 decades. 2005 mein tha, it was 18.5%. 2023 they went for 19 point something. So where the money had to go? The money had to go in 4 sectors: railways, defense, infrastructure, power. So these are the relative changes that you need to spot. The biggest relative change now, ma'am has given 1.2 lakh crores in the hand of Indian investor. 1 lakh crore diya. So where will that money be spent? Those people who will be able to get that money, something like a Bajaj Finance, will be able to do I believe would do maybe very good from here. So you have to spot these relative changes. Because relative changes have now become very, very scarce. When the overall global growth and global growth is not there and global inflation is not under control. So somewhere you have to look at small changes which are happening and then look what companies would be able to take advantage of it. And markets have a tendency, we cannot accept the fact that they, take the stocks from dust, just change the degree of carbon, turn them into diamonds, and then, again turn them to dust.
But the consumption story that you were talking about, I just had a thought here, and correct me if I'm wrong, there's this wealth destruction effect also, right? I mean, now people are losing a lot of money in the market, and eventually that wealth destruction effect is going to have an impact on consumption. I mean, people are not going to be buying as many homes or, buying as many iPhones because they're losing so much wealth in the stock markets. So do you think that will have a ripple effect, at least over the next 6 months?
Maybe over the next 6 months, but I think consumption habits are very difficult to change. It's all relative also. So if we are friends and we are in a group and we both have, say, a Maruti Alto, we are okay with it. We'll live our life with it. Now you go and buy a Mercedes. So I'll be like, why not me? So relative things are there. But overall, I believe that consumption habits are difficult to change, and with now the rate cuts, the rate cuts are coming. So somewhere the government is working well now. The RBI is infusing in liquidity. Yeah. And then if the stock market rebounds, which I'm very, very confident that it will rebound. I don't want to give targets for Nifty, but I have very, very optimistic targets for Nifty for the next 2 years.
You can give them. Please be my guest.
I believe it will be 30K plus before December 26.
Okay.
Yes.
And what gives you that confidence?
Indian markets are all right. What has happened to Indian markets? The Indian growth story is intact. It's just the FIIs are taking. What have FIIs sold? FIIs have not sold anything. This is just bhana that every
1 lakh crore they've sold this year. Yeah.
Every time they do it. Yeah. Just if we get the data, data is that powerful. If you get the data, you'll find that they do it from time to time. Yeah, they do it from time to time. They're getting a good exit, and then I believe the main problem was with the US dollar thing. Now the US dollar thing is also somewhere stabilized. So I think it will be all right for the Indian markets. I have no doubt in it. And currently, what day it is that we are talking on today, I believe that it's a very, very, very good valuations, and there is so much fear in the market that I think investors should take some. I think if I'm doing like one SIP, if I'm doing 1,000 rupees, I'll do 2,000 now. Let's do 2,000 at least for this time.
So give me a basket of stocks. If you had to spend 100 rupees today in say 5 or 10 stocks, what would they be? Of course, not recommendations, but I mean just
Of course, not recommendations. But what I like, as I told you, CDMO, I'll give out of 100 rupees, I'll give 25. I like it so much. Maybe I like something in hospitals as well. Okay.
Hospital companies, Apollo hospitals.
There are newer hospitals coming up. Very, very nice newer hospitals.
Like which ones do you like?
I like Healthcare Global. Yeah. So wonderful company, and growth is there. Niche product. We see a lot of, when you go to hospitals sometimes, maybe not in Mumbai, but in tier 2 cities, you'll see a lot of foreigners there.
Medical tourism.
Yes, medical tourism is happening in India a lot because, see, Dubai doesn't have only. Okay. When it comes to Singapore, very, very expensive.
Very expensive.
Very expensive. Europe and US, तो बात करने की जरूरत ही नहीं है, मतलब like next level.
6 महीने लगते हैं
6 महीने लगते हैं, and then they'll rip you off.
Yeah.
So we have most intelligent doctors with a lot of exposure. I remember when I was studying in the UK, the doctors didn't know कि छोटे से infection को कैसे treat करना है. Yeah, they may cure the best of cancers, but they don't have patients. Population is not there. India, 150 crore people. So the lot of exposures. You go to AIMS, you go to PGIs. The doctors are full. I remember meeting a doctor. He used to treat around 500 people in a day. How is it possible? Like that is the level that we are operating at. So Indian hospitals, I believe, is a very, very good story.
So healthcare global hua. Apollo Hospitals, of course, has been a big wealth creator.
Narayana Hrudayalaya also. It's a very well-run company. Very well-run company. So it's one of those quality. I would call it a blue chip.
Of course it is.
It's a blue chip. Yeah. And then hospitals, and then financialization of assets we talked about. So I would give at least say 10-15% to these. A lot of value I'm getting. So at least 25% to I'll take value. Yeah, mouth-watering valuations
so CDSL वगैरह.
हाँ, mouth-watering valuations मिल रहा है कि एक बार तो लेंगे, बाद में देखते हैं how the thing plays out. It's not necessary. I'm not married to the stock. I don't want to hold it forever.
Correct.
I am a hardcore proponent of not buying a company and buying a stock.
Achha.
So very different from my peers in that way.
Explain that to me.
Yeah, I am buying a stock, not a company. Everybody says that you are buying a company, not a stock. So I think that's sorry to say that, but that's the fund manager's conviction, way of convincing people. I believe I'm buying a stock. I'm buying it at a PE. I'm not getting it at the same value that the person made the company for. So somewhere I have to take an exit. If I cannot hold the stock for the next 10 years, if I cannot hold that company for the next 10 years, then I'm buying a stock only. Yeah. Either you are like Warren Buffett, who can hold a company forever.
Hold forever. You don't have that philosophy.
Yes. No, not at all. Not at all.
Okay.
Yeah.
So tell me more, what is your investment philosophy? I mean, when you say you don't buy and hold forever, how do you decide when to buy? And more importantly, how do you decide when to exit a stock?
See, so my funda is very simple. I believe that I've been influenced in my life too much by, I would say, biases. Yeah. People create biases that I am a value investor. Okay. I am a growth investor. I'll only buy quality. Okay. So I believe why? We have one life, and why do we need to be biased? And so we have a four-stage framework, Sonia. We believe that first stage is when the markets are oversold, when there is too much fear in the market, when the valuation comfort is to the max, like is the case right now. Here we'll buy a lot of value. We buy value only when there is overall value in the market. All these are stages are, governed by some principle which we have developed with our experience. We've been into the market for 30 plus years now. Okay. Yeah. So our first principle is buy value only when there is overall value in the market. Yeah. Because otherwise, what may seem value may actually be a value trap. Yeah. Stock market is full of intelligent people, and you will not be able to make maximum out of. So
can you give me an example?
For example, how we are buying ABB or CDSL right now. Yeah. So all these are value buys. So stage one is value.
When you pick a value stock, right? So CDSL, for example, it's corrected now some 30, more than 30%, right?
Around 40%.
Around 40% now. You are okay with seeing a further depreciation in the value? I mean, obviously you can't catch the bottom.
Yes.
So till what extent are you okay with like the stock falling further from where you bought it?
No, once I've bought value, so when I buy value, I say that the company may not grow for the next 2 years, but it should be all right. If I'm able to see that all right, I'm not able to justify, then I'll take an exit. The price won't make me exit. Yeah. So when you say all right, you mean what? Like it should be stable growth. It should be stable growth. No growth is fine. No growth is fine for the next couple of years. That's all right. But stock price, if the stock price falls another 20% from where you bought it, that's all right. That's no problem. Okay. That's no problem. Okay.
Okay.
Yeah, because I know
That doesn't bother you.
because I'm buying a blue chip now.
Yeah.
I don't buy those smaller companies in value. I buy those blue chips which are leaders in what they do. Yeah. So
So as long as the company is a market leader, it does. If it's falling in a bear market, you will still put value over everything else. So you're getting it at a cheaper price. You're okay with it falling another 10-20%.
yes, I will give value a preference, and then the only thing is that the first reason that why it was a leader for the last run, that theory should be intact. Yeah. For example, my biggest holding in last couple of years were railways and defense and all. So we are also getting them at value. So why not buy the leaders of this? Because there I feel that the story, the way the government was focusing on capex, and now the government, once it lost the elections, it lost its way a bit. So now, of course, government is government. The first thing that they want over everything else is to win. Now they're focusing more on those reform measures. They're giving 2,500 in Delhi, Maharashtra, they gave 40,000 crores. So where is that money coming from? Ultimately, net sum zero has to come from capex only. So now I believe the story there is not intact. So I'm not buying value there. But somewhere I believe the financialization of assets is still okay. So I'm okay with buying a CDSL. Yeah.
But why do you think CDSL corrected so much in the first place?
I think
Purely valuations?
Purely valuations, too much expectations, too much exuberance, and I believe it maybe for me to buy.
For all of us to get a good price and good entry point.
I think all jokes apart, this is the nature of markets. Yeah, this is the nature of markets. They have
And
their
it's
excesses and
interesting, right?
correction of
Because
excesses.
like we were discussing Trent, I mean when Trent was at 9,000, people were like, oh, we wish we got an entry point, it's rallied so much. Now Trent has halved since then and people are not buying it.
Absolutely,
So it's that
absolutely.
classic greed versus fear.
Yeah, absolutely. Oh, I think greed fear comparison is the only reason we do quant. So our stage two is growth. Yeah, as you were asking, what are investment framework? Growth. This is where we spend maximum time. That, as I told you, ab tak hua, aage kya? Yeah. So now suppose we have two companies. So it's two companies, me and you. Okay. I am the bigger company. I am doing say 10,000 crores of sales, and I am projected to grow. Our management quality is almost similar. We have the same pedigree. Now I say that I'll grow at 15% for the next couple of years. But you say I've just started, I'll grow at 30%. These are the reasons. Of course, a lot of reasons going forward. But then our system will give more preference to your company rather than this company. Yeah. Why? Because usko lagta hai ki growth, stock market, the money only flows where the growth is. Yeah. So we just follow growth. Ki growth hame kahan mil sakta
So
hai.
can you give me two examples?
All the CDMO companies that we're talking about is growth, not value. They've not corrected, but they are growth.
But a lot of them have also grown quite a bit, like over the years, right? Loris Bolo.
Yeah, but I think the overall thing is just started.
Achha.
You know, I think the overall thing is just started for them, and maybe what else are we buying? I think Trent for me is also a growing company only. Trend for value bhi hai, but growth bhi hai abhi. I think fast moving fashion in India. You know, whenever a stock falls, you talk about those Sheins and everybody. But somewhere the growth for these companies is still to go. Yeah. So you have to find the relative changes. Okay, yaar, relative change kahan ho raha hai? For example, the textile sector. The textile sector, the apparel sector or the textile sector, they are doing pretty well. Look at the government policies. They are coming at PLI of $1.4 billion, and then Bangladesh taking a hit. Such a big relative change. The Bangladesh textile parks were massive, Sonia, massive for a company, for a country with such low income. Bangladesh textiles were doing from 2013 to 2023, they have grown at what, 80%. We have just done 5%. Now as the government has woken up to support the textile sector, the Mitra scheme has come up.
So
now.
Within textiles, which companies do you look at closely? I mean, which are the market leaders there?
See, it's very easy. Just go on Screener and see various sectors. This thing, what do you call it? What is the name? Sorry, I forgot.
Gokuldas?
Not Gokuldas. Pearl Global is nice. Pearl Global is doing pretty well.
Pearl Global, okay. I haven't tracked it actually very
No, it's a
closely.
very nice company. Yeah.
What does it do?
It's into apparel. apparel manufacturing. And you know, they are adding their value. First of all, everybody use cotton. Now nobody wants cotton, you know, in a large scale. So all these man-made fibers have come up, and government is promoting a lot. Government is very, very serious about textiles, especially the Prime Minister. Yeah, they have set a target of like a very ambitious target for 2030, but the Prime Minister was saying in a conference a couple of days ago that we will meet it before 2030. Yeah, so textile, because it's a huge employer also, and then we have been very strong in textiles, like we have been in pharma and IT, we have been in textiles also. Yeah, we've been very strong in textiles. So China had very organized way of doing is large. They set up large parks and everything. Our government didn't support earlier. Bangladesh had that some advantage where lowest cost, where the income is not right, they are given special advantages to sell in the UK and US. So now India is also doing a lot of agreements with a lot of countries for textiles. So government is actively playing a part in textiles, I believe. Textiles is a sector to look at.
Okay, so we've discussed so many sectors. By the way, guys, just wanted to say that if you like our video, if you like the kind of programming and content that we're doing, please hit the subscribe button, and you can always tell us in the comment section what you would want us to talk about. Also, all the stocks that are discussed in this video are purely for educational purposes. These are not stock recommendations. So please do your own due diligence and consult your SEBI registered investment advisor for any kind of stock purchase. Okay, so this has been really interesting so far. We've spoken about so many sectors and things that you're interested in. You told us how you went, moved to all cash in December of 2024, and I think you got that call right. And now you're sort of deploying your money. But tell us a little bit more about the strategy from here on. You've told us where all you're deploying, but when do you buy, when do you sell? I mean, people generally tell you what to buy, but they never tell you when to sell it. So when do you sell a stock?
So my decision to sell a stock is generally not stock based. When I take a company, when I buy a company, I buy it with conviction. And then, as I told you, again, in the next 2 minutes, I'll explain the entire framework to you. Value, we buy value only when there is overall value in the market. Okay, so all these companies, like something like, as we talked about CDSL, blue chips, which start trading below their values, and they've taken a 40%, 50% hit, something like that. Then growth, as we discussed, CDMO and all, which we believe can be the leaders of the next run, which have relative change working for them. Now, when the markets, they become expensive. In expensive markets, I need my expectations to be right. Okay. In these expensive markets, I sell the entire portfolio, and I go in for a portfolio which I will be comfortable holding in a bear run. Suppose a bear run comes, I will be comfortable holding it.
So like, for example, if there's a big bear run from here on, right? What are the stocks that you would be comfortable holding?
Let me give you an example. When the growth would start, maybe I'll buy something like State Bank of India. Just to give you an example, because we have so many names there. Maybe then the growth starts, I have a relative change that the management of ICICI is now very good. I'll buy ICICI Bank, hold it for a couple of years. Then when I believe that the markets are now expensive, now ICICI Bank in a bear market won't give me comfort. Now maybe I'll go in for the biggest bank in India, maybe for an HDFC Bank. Yeah. Now the market is falling, and my client calls me and I tell him that, yeah, we own the biggest bank in India. It's the most quality bank. Everybody knows that. Yeah, so I'll be comfortable in a bear run. Bear run में क्या होता है कि you should not be afraid. If you get afraid and sell your portfolio, then that is the real problem. You have to stay on the pitch, and you will stay on the pitch only when you have very, very nice companies. Now in stage 3, I don't focus on growth at all. I focus on very, very good managements. I focus on maybe a company having a moat working for it, any type of moat working for it, which is only available to it.
So what stage are we in right now, you think?
I think we're in the value stage now, stage 1.
अच्छा, अभी bear market अभी तक हुआ नहीं है पूरा?
No. So value, growth, quality, and then safety, the cash call wala.
Okay.
When the expensive market ke saath, we see exuberance in the market.
So what stage of the market are we in right now?
Now again, after stage 4 comes stage 1 for us. Now we are in the value stage.
Okay.
Now we are in the value stage.
So you're looking for all companies that are giving you good value right now.
Value, and somewhere if I am finding growth wala relative change, because to spot growth, it is difficult. You don't get growth companies every now and then. So whatever growth companies we are getting, we are buying them. Along with them, we are buying a few value. But we are fans of growth. Yeah. So now I believe so where to sell, as I told you, when the markets they become expensive. So what is happening in this entire portfolio? We're just reducing our beta. Yeah. So beta reduction, guys, is a very, very good way to save the profits that you have made in a bull market. Yeah. So maybe you started with something like, now it's not good to talk about it, but I remember we initially bought Yes Bank in 2013. Then we sold it and bought, I remember, Axis Bank. But finally, when I believe that the markets, we were in HDFC Bank. So this is, or maybe a Bajaj Finance. Those quality companies, इसमें डर नहीं है. मैं कहता ठीक है यार, मैं hold कर लूँगा.
But also, if you look at the track record, a lot of these great companies are not great stocks. Whether it's HDFC Bank, whether it's Asian Paints, whether it's
Sonia,
something like a
you are
Kotak
saying that
Bank.
because had this interview podcast been in 2021 or 22, these were the best performing. H2B2, H2 for the HDFC.
But last 2-3 years, they have done nothing for investors.
Yes, absolutely. They have not because the valuations were not right. So somewhere, if you talk about the last few years, these stocks didn't last a couple of months when other stocks were down 40%. They didn't fall that much. You know, so they provide a sense of, you know, the risk reward has to be changed from time to time. You are expecting 15-18%, but you know, if I'm caught up in a bear market also, they'll not go more than 15-18% down. So somewhere and markets can remain expensive for a very long period of time.
Yes,
we have seen it in the past. Yeah, so 15-18% expectation, 15-18% downside, I'm comfortable. My profits are secure. Or kahin, if I am able to get, okay, now there is exuberance in the market along with expensive valuations, it's okay to take a breather. As a fund manager, if I'm telling my clients that, boss, I am putting your money in a liquid fund or an arbitrage fund, and for that period, I'm not charging any management fees, I'm not charging any performance fees. So clients do acknowledge, okay? And we have not done it like, it's not a, I would say, fluke. We have done it in 2021 also for our clients. From September of 2021 till the Russia-Ukraine war broke out, I was in total cash. Yeah, wow. Yeah. So somewhere in expensive markets, because when somewhere, we both have seen 2008. Yes. Yeah, the Nifty fell 65%. Somewhere it will happen again. Somewhere it will surely happen again in our life. What do we do then? What systems do we have? अगर हम blindly चलते रहेंगे कि हाँ नहीं कुछ नहीं होगा तो नहीं. Somewhere we have to make systems which will protect. You know, if Nifty fell 65%, I'm sure portfolios will have fallen 80%.
So now if somebody's portfolio is down 30-40%, but there is still this fear that there could be a further sell-off in the market, what's your advice to them? To hold on or to book their losses? See,
if my advice is to surely hold on. Sell की तो बात ही नहीं बनती है अभी मतलब it is a wonderful time to buy. I think around 18th of January we went all in. 18th of February, sorry. We started on 28th of January when the fall came, and now I think we have started to go all in. And you know, investors can
fully deployed now.
Fully deployed now. Okay. Fully deployed and very happily deployed. And somewhere I feel that a phenomena that, let's talk about this, a phenomena that I've observed which investors, you know, can take note of, and I would like them कि इससे वो सीखें. The one thing is, if you look at the bull market, you know, bull market, we've talked, you must have talked it in the past also, that they feed on bad news. March was when the SEBI chief said that the these mid and small caps have a froth. Dip, bought away. Then the elections, vote, dip, brought away. And then the Japanese yen carry trade problem, dip, bought. Now all the good news are only coming. RBI, the Fed rate cut, then the Fed second rate cut, then RBI rate cut. Such a wonderful budget, you know.
But there's a lot of bad news also. There's talks that US could be going into stagflation. There is, you know, inflation situation over there. Growth is slowing down.
That is what I want to mention. Now, just wait for a good. How do I say it? Just wait for a good bad news.
Good bad news.
No, bad news are where capitulations are made.
So this market is not capitulated yet, according to
I think it has now. It had, the broader indices had capitulated, but the Nifty was not capitulating. Now I believe the Nifty also has done it. You know, if I ask any investor, I joke within my team that, okay, tell me what is the bhav of the BSE mid cap index. And we will be like, what is the bhav of Nifty? Like 22,000. So the fear doesn't ultimately resonate till the Nifty capitulates. I think Nifty is also capitulated to an extent now.
Correct.
The Nifty is at 500-day moving average, yeah. And when I was saying this,
But 15% from the top is not capitulation, honestly.
In this Nifty it is. Maybe the Nifty we had in 2006 or 2008. And now look at the index. Now
Broader market capitulation, I agree. But Nifty capitulation, I think, is still not happened.
How I see is that, no, I think the Nifty capitulation has also happened. For me, it has happened. More or less, it has happened. Of course, we cannot predict the bottom. And that is not the obvious purpose also. The obvious purpose is कि जब नीचे ऊपर इसलिए बेचा that when we are at this stage, our mind is sane. If my portfolio was down 35-40%, my mind would not have been sane. That is how my nature is.
But see, you took that call, that cash call, right? So for you, it kind of worked out in your favor when you took that cash call 6 months ago. But for a lot of people, that has not played out. So how do you then sort of wade through this bear market?
You have to believe in the fact that, okay, we didn't do it. It's not necessary also to firstly take a cash call, Every person is different. Everybody has a different psychology. But if you're holding stocks, firstly, you should have conviction in them. And a lot of people where I feel get stuck, if we're talking about our dear retail investors, which I believe is one of the biggest powers right now. They're saving us from the FII wrath also. So, do not buy the leaders of the last run when they are falling. That is the biggest problem. I have seen clients' portfolios.
Like, give me examples.
I have seen client folios जिनके पास आज भी silver line, Penta Media पड़े हैं.
Oh gosh.
Unitex आज भी पड़े हैं. They're talking about Unitex, they're talking about Anil Ambani companies. This should not be the way. If a stock was a leader in the last bull run, there is a very, very, very good chance it will not be a leader of the next bull run.
So tell me, if one is creating a basket of stocks now and mid and small caps are looking very attractive now. Leave the large caps aside, but in the mid and small cap space, where are you seeing large amount of value and growth?
As I told you, the themes we have already discussed. That is now there. I do not look at yes. I do not look at mid and small cap and large cap point. Large cap is only in value, because in value, I believe if I don't buy large cap, I can be stuck with bad companies as well. So otherwise, I think we have discussed the themes that I told you.
Any other themes that we missed? So we discussed CDMO companies, there's textile, there is hospital companies that you really like. There are also consumption, right? Whether it is names like Trend, Zomato, etc. Any other big theme that you think can come about in the next 1 to 2 years?
I think these are it broadly. If we talk about themes, then there will be individual companies, but overall these themes are very, very strong.
Okay, interesting. And you were telling us about your own journey, right? I mean that you've seen many bear markets, whether it's 2008 and 2020, and all of us have been there, done that, so to speak. What has your big learning been from seeing so many bear markets and how to sort of approach them?
See, first of all, you have to acknowledge the fact that any bear market that has come in the past, how will I live through it? That is very, very important. We are not coming here and, maybe playing just one bull run and then going away. We are here. This is our business. This is our life. And 100% of my net worth is in the stocks that I buy for my investors. So I have to be very, very clear that how will I navigate if a bear market comes? So you need to firstly acknowledge it. Most of people don't acknowledge कि हाँ ऐसा हो सकता है कि Nifty, of course the Nifty
they don't accept only that, your portfolios are in a bad shape.
Yes, and सबसे बड़ी बात है कि एक bear market कभी I'm sure सोना कभी ना कभी एक बार 2008 होगा. There will happen in 2000. What will we do then? So we have to make sure we have systems in place कि वो बच जाए, because like I believe 5 years of wealth creation just goes down in 5 months. So you have to be very, 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 be cautious about it. I think money making is more, my realization is money making is more a game of saving money rather than growing money. If you're able to save money through bad periods, you'll grow them through good periods. Yeah. So, and in good periods, it's a very simple funda. Look where the growth is. In bad periods, firstly you have to acknowledge it, and you have to make a lot of systems. Everybody can make systems based on experience. We have a lot of systems where we believe. I always had this question in mind: what if a 2008 happens to me again? So I put in a lot of years just to solve this question. Yeah, a lot of years, a lot of time just to solve this particular question. That what if a 2008 happens to me? What if a 2008 comes from here?
Correct.
Okay, how do I solve it?
Correct.
So I have systems in place where I know that okay. We have entered, we feel it's a very, very good time. After maybe a few months, we realize the things are not that right. And how do we exit?
So what stayed with me is when you said that this is absolutely not a time to sell, this is the time to buy.
Yeah.
Given what you've seen in the last 6 months, the fall, valuations are looking good right now.
Yeah.
What else would you like to tell that retail investor who's watching you right now and who has lost a lot of money in his portfolio?
First of all, set your expectations right. I was an investor before. I've turned a fund manager in the last 5-6 years only. So what I've seen that expectations of investors in a bull market, they are very, very, I would use the word abnormal. Yeah. So you have to set realistic expectations from the market. I believe at INVASSET what we say, what I want for myself, if I get this, I'll be happiest person for when it comes to my financial part of my life. I believe that if I'm able to grow at 18 to 28%, so there are 3 to 4 year cycles in India or wherever in the world. If I'm able to grow at 18 to 28% CAGR, I am more than happy. If these are 14% product, 12-14% product, I want to do 1.5 to 2x. So everybody will have this differently. You need to firstly set that right. कि मुझे ये CAGR कमाना है, and this is the way I should do it. Secondly, you should have a lot of importance on your capital. It is the capital preservation. If I've seen wonderful, we did a study back in 2011 where I interviewed around 250 plus fund managers. We made a team and we interviewed around 250 plus fund managers, and there are 1,000 plus retail investors from different part of India. So, for it to be all inclusive. What we met so many good investors who just lost confidence in the market. Why? Because they were not able to protect their capital or the capital of their clients, and they never came back. So the biggest rule is to stay on the pitch. Yeah. So this is very, very important. Then I believe do not form biases in the market. People used to say buying PSUs is a crime. PSUs are not for profit. Okay, why? Like, you have to look at the proper relative changes that are happening in the market and then take decisions informed. We are in the world of artificial intelligence now. Yeah, we cannot rely on those old methods of a fund manager's conviction or an investor's. Of course, they are also wonderful, but there are newer ways of doing things as well. And fourth, I believe try to get as much data as possible. We are in the world, as they say, data is the next oil. I believe data is the previous oil. Things are moving at a very, very fast pace.
But do you guys use a lot of AI tools to, for your models, etc.?
Now we have started using AI, LLM models. We have started in terms of, the deep search. We have started now using in terms of when we are making our reports and stuff, so that they are better made and stuff. But of course, what human intelligence is now, AI will never know how much will it take to make a steel plant or a cement plant in Bhilwara.
Correct.
Yeah. So we are using them. We've started using them, but AI helps us a lot in coding now. What our coder used to do in 30 minutes for getting things, now AI does that for, he'll get it done in very, very quickly. So we are taking help of AI, and I would say the rate is increasing at a very, very fast pace. Our strategy, because we are quant, it's totally data. Anirudh Garg doesn't have a say when data comes in front of us. So I do not have a bias. My personal portfolio, though it is a replica of my client's portfolio, my father always says that, why is your portfolio always underperforming the client portfolios? You should outperform or rather be actually okay. So whenever you take some panga on your own, the human bias will be there.
Correct.
And you will tend to underperform a system. So make systems, make formidable systems, test them. We have tested our systems from 1st of January 1987 till today on a day-by-day basis.
Wow.
We have implemented them for 11 years. So somewhere we feel make very, very formidable systems. अच्छे time पे तो सब कमा लेंगे, बुरे time पे how you can preserve the capital is very, very, very important.
Okay, and on that note, we'll end with one target that you told me. 30,000 on the Nifty is your target by end of 2026.
End of 26, early 27. Yes, I believe it should be. We should be there.
And till then, what's going to happen? How much will they? So are you saying 20,000 will come before 30,000?
I don't think 20,000 will come.
Acha.
I don't think 20,000 will come.
Okay, so you don't see a very big bear market, but you see the bull run.
No, not at all. I don't see. See, again, that will be a bias. I do not see it right now. Maybe after
Things
3,
can
4, 5
change.
months, things can change, and we are adaptive to change.
Okay.
Right now, I don't see it.
Okay.
Right now, I'm going all in.
All right, going all in. Thanks a lot, Anirudh, for joining us on the Money Mindset. It was a pleasure having you here.
Absolutely a pleasure. Thank you so much.
And thank you guys for watching the Money Mindset. As always, please click the subscribe button, and any comments, any feedback that you have, always happy to receive them and implement them. Thanks a lot for watching.